Hi everyone, and welcome back to another Patreon video. This video we're going to keep very simple, and we're going to start it out with the Bitcoin dominance analysis. In our last video we was around the 55% level, outlining that potential pump back to the upside for a lower time frame Bitcoin dominance pump to the upside. Simple levels that we're watching here is these wick to body trend lines. We'll use the first trend line, and we'll also use the second trend line for potential manipulation, which I believe aligns more coincidingly with that big bearish candle there at the 58-59% level. It's almost akin to what we got here, guys. You remember when we was talking about the Bitcoin dominance down here rising to the upside and looking for that big bearish candle? Look at where the market rejected from. It was that big bearish candle, but we had a couple of wicks up and beyond that level, so a very similar thing could happen here on the lower time frame. So we'll drop it down to the 4 hourly and we can see if we can get a better idea of what's going on. We've got our weekly level there, we've got our trend line manipulation taking place here. So a very simple thing that we can do is use one of our Fibonacci techniques from low to the current high, and we've got another confluential level there about the 58% level. But remember, we can get wicks in and beyond, so if we're looking for some wicks like we got on the higher time frame, just take the trend line here from this wick to that wick and look for the potential manipulation above that trend line and then coming back down to reject, hopefully in and around that negative 27% level for continuation to the downside. Many people might call this a bear flag or a bear, people call it what they want. Same analysis. It's just a different perspective looking at the market. We like to keep it as simple as possible, guys. So still looking for a little bit of Bitcoin outperformance on the lower time frame, which is why we're seeing some of the altcoins stall out. Then 40-50% corrections came to fruition, and they are now going in for potential lower time frame wick fills. So Bitcoin dominance here, looking for a move back to the upside. 58-59 level is what we're looking for. That's the type of wave structure with the Fibonacci confluence of the higher time frame levels that we're potentially looking for. You've also got another level here that is, if the market is to really take back some dominance and Bitcoin push up, the next level that I'd be looking for is that 60% level for this big bearish candle here in efficiency. So if the market is to potentially go in for a manipulation above this trend line, something like this, then the next thing that I'm going to be looking for is that trend line there with the overthrow into that 60 region for then a rejection, and similar type of wave structure that we're looking for here but on a higher time frame, and then continuation down. The higher time frame perspective is the same. We'll zoom back out onto the weekly time frame. Higher time frame perspective remains the same, guys. Our targets, take a look at that, very nice confluential level here at the 423%, aligning with the big bullish candle fill. I don't believe Bitcoin dominance is going to set a brand new all-time low this cycle. I do believe we potentially just head into this region where everyone says we're just getting started. I've said that many times, and the market potentially going for the beginning of the bear market once this 40 to 44% level is hit. And if you see there, that would potentially coincide with a bit of trend line manipulation as well. Everyone's saying, oh yeah, we've broken down. But you see how that manipulation would work with that target being hit and then the market to reverse and potentially head into that bear market. But a long way from that for now. And we'll move on to Bitcoin just in general. Okay, so we're starting to edge towards some of our higher time frame targets here on a medium time frame, which is the 109, 112,000. The main aspect of the market here remains the same, guys. We're still looking for that 140, 160, 180 region. I don't believe we're going to hit that 200,000 mark. We're already past that 100,000 mark. I believe everyone's going to start calling for that 200, 300,000 zone, but we're going to see wave structure, in my opinion, like this. The ending part of the cycle, 1, 2, 3, 4, 5. Look for that extended fifth, maybe we'll get that push into the 180 region, but aspects of this remain the same, guys. We're remaining calm, we're remaining cool. It's a very bullish market. Everyone wants to come back and return. Many of your friends might be asking you, oh, is crypto a good thing to get into now? And some of your family members wanting access to some altcoins that you potentially think are going to do 10x, 20x. These are the signs, the early signs for us to say, you know what, guys, we need to start marking out our downside levels for the potential bear market incoming after this big move to the upside. So Bitcoin dominance suggests that Bitcoin is potentially taking back a bit of dominance, but if we start to chop in and around these regions, we should then see the altcoins start to take over once again. So let's zoom out and just look at the bigger perspective here, guys, of where we are. Remember, on the course, when I talk about them 3 psychological pushes, 1, 2, 3, we're in that third psychological push. We're in the most exciting time, but we needed to see some altcoins stall out because we saw 300, 400, 500% moves. We saw late leverage enter the market, so we needed to see them altcoins stall out. So if you're feeling panicked or worried about the market at the minute, I mean, it begs the question: have you played the cycle as good as you could have at the minute? Possibly not, because we've seen 400, 500% moves on some of our major altcoins, and I know a lot of people have taken that 20, 30% profit and sitting back and relaxing and enjoying the profits and enjoying being risk-free. But I know some people are also waiting for them higher targets, and it's not to say that people are right or wrong. This is just my strategy, guys. When you take them 30% profits after them big moves, it leaves you with the emotional stability to be able to withstand the potential lower time frame chop moves of negative 30%, negative 40%. So always a good thing to just sit back, relax, let the market do the work, and if you need to, zoom out, realize where we are, and check your psychology as to why you're feeling that way. I did make a video a couple of months ago outlining the parabola being built on the higher time frame. So all we need to look for, guys, really is if this trend line gets broken to the upside, it potentially suggests that the cycle has ended. A very simplistic way to look at the market, but one of the best ways to look at the market. It's always been a very crucial thing to use in the market topping or market structures that you want to look for tops. Similar thing happened here, guys. Once we saw that market structure crash, we went in for one more high, but we know the true euphoria was in this part of the market cycle. So once we start to get really overextended from this trend line, which could coincide with that 140, 150, 160 region, you know, we see this thing play out so many times, so it's important to just remain calm and understand where we are in the cycle. So that's Bitcoin dominance done. A little bit of a lower time frame on Bitcoin and understanding the psychology of why people are thinking and feeling the way that they are. We'll move to total 2 though, because I think total market caps have been some of our key charts that we've been using over the past year or two, to outline the potential pullbacks in the market and entry zones and exit zones and potential pumps and dumps in the market. I think the total 2 market cap is heading in for a corrective wave structure. We're sort of seeing 3 waves here, 3 waves here. I'd like to see potentially 5 waves slam into that zone. 1.414 confluence with the big bullish candles. So that's the zone I'm going to be looking for, guys, on the total 2 for a bounce. Very simplistic way to look at it, and then looking for the higher levels. We know that would probably take us into a brand new all-time high. If we just zoom out, that would be the wave structure to pretty much take us into the brand new all-time high, where sky's the limit. And we've got our extensions outlined. I think I put them out in the last video or the video before, outlining why we thought the capital rotation in the market, where we believe that the total market cap may top the total 2 market cap, total 3 and others. So if you need reference, just going back and watch the last few videos. We'll move on to the others chart, because this is one where earlier in the week everyone was getting really panicked. Remember, we called for that big correction back down to these levels, and at the minute it's only a wick, and this week is starting, and we're starting to see a little bit of that wick get filled. Remember what I say, guys. What do we always look for when we see big wicks like this? Just look for 50%. That could coincide with a total 2 move down, 360, 369. That's the level to watch, in my opinion, on the others chart. Drop it down to the 4 hourly, see if we can get a bit of a better idea of what that would look like. would that be? Yeah, so at the minute, guys, when you look at charts like this, I mean, when you just look at that correction and you see what the automatic rally there, it leaves the empty space down here for people to start putting their stops in the market, for the market to take them out and then continue to the upside. Empty space here, and that's what the Fibonacci is very, very good at, the negative Fibonacci, giving them confluence levels with the bullish breaker candles for the move down deviation with the potential trend line manipulation there. For the move back to the upside, giving our targets for the 400, 500 region for a slam back down into the all-time high. So that's what we're looking for on the Bitcoin dominance, total market cap, total 2, and the others chart. So just take it easy, guys. These are very simplistic ways to look at the market. Just sit back, relax, and let the market do the work, and take it easy.